Hello and welcome to Martyn Lucas Investor. My name is Sensei and you are watching the Morning Forecast Show. Today we have a big special for you, a massive data release. About 6 or 7 simultaneous data releases focusing on inflation, GDP, jobs, spending, housing, a lot of data being released in just under 1 hour. Up at the timer on the screen, you can see it there. 54 minutes to go, so let's get prepared for it. The odds are changing. There is now hikes priced in for the year. So we were right when I said there could be rate increases. We were right when we said only potentially one, maximum 2 cuts this year. Me and Martyn both said it last year. We said it over and over again, almost 6-7 months ago. We said there's only going to be 1 or 2, maximum 2 rate cuts next year. And then a few months ago, we started saying there could even be rate hikes, and that is now being priced in. So be prepared for it. Oil heading up. War is raging on, and there's no signs of that ending. So stay with us. Let's go into the reports. If I can ask everyone to please take 1 second to hit the like button. It literally only takes 1 second and it helps out a lot. So please do it. It's completely free. I know most people haven't done it yet and most people won't do it, but do a change for today. I know most of you do hit the like button. Most of the Lucas Eds and members here do. But if you have just tuned in and you forgot, please do it. And if you don't normally do it, maybe today's the day you should hit the like button. That would be great. Okay, let's get into it. Where are we going to go? Well, we'll go straight to our very own newsletter, sensei.news. And what we see here is the homepage. Let me just quickly show them on the homepage. Some people miss this. Let me just change that 1 second. My notifications were on. I don't want them to be on, so I'm just closing that and opening Discord. Okay, yeah, we're all set. So yeah, sensei.news. You go to the homepage here. Most people don't. Some people miss this. You can always go to the homepage on a desktop on your phone. Obviously, there's the app, which is great for getting the newsletter and participating in the chat. But the website up here, you can see all the different perks and benefits. So you can go to the homepage where you can see what's just been released. You can go to the chat, the private members chat. That's where I posted the oil trade essentially last week, which was between 200 and 1,000% move up in a matter of days. We've got the XRP Weekly, the weekly XRP crypto report with the chart every single week. You've got the morning forecast. That's what comes out every trading day with all the news that you need to know for the day. And sometimes the cheat sheets come in as part of the morning forecast. You've got the portfolio challenge where we're assembling a portfolio. There will be more updates on that Friday next week. We are waiting for potentially another correction, / we'll also deploy money anyway. The week ahead, that's your calendar. That's your go-to economic calendar. So you go to that, you press on the last week. You can always refer back to see what the most important parts of the week are. And as you can see in red, is today. US GDP Q4 second estimate and core PCE. So you can see that was important. You can scroll down to the exact day we're at and see what's going to be affecting the markets. And you can see it's got two lightnings next to it, meaning it's a very important data release today. Plus, we've got some actually more data coming out in a few hours as well. I'm sure Martyn will be covering it. Personal income and spending is all coming out as well. Let me and at the bottom you can see the three most important events. Last night you saw a very important event was Adobe, and if we bring this screen on right now, we can see Bloomberg talking about Adobe down 7.8%. So we said it's going to be an important one, and there it is. We can see what the effect of that earnings was. So let me go back to the home page. Let me take that off the screen for a second. We can actually leave it running. What was I going to show you? So yeah, if we go back to the homepage, it's as simple as sensei.news. Then that's the week ahead. The cheat sheets, those are all the things we will run for data events for FOMCs. Anything you need to be more informed about with a data release coming up. You can see today's morning forecast falls into that category because if you go to the deep dive section today, you will see the cheat sheet for today's data release. Also, our very own app, Worth Lens, your net worth tracker, has been released exclusively for premium members. You can go check it out. It's password protected. We don't take any of your data, and it's such a great tool. So if you haven't played around with it yet, please go ahead and do that. Soon there will be another edition. That will be the training course, which will be an additional benefit at no extra cost for newsletter members. So that's exciting. We have some plans for integrating with Discord as well. So Discord members, keep an eye out. Okay, so that's the website. Obviously, we click Sensei.news, go to today's stories. If you have just tuned in, we're covering the biggest data release of the year, just ahead of FOMC report in a few days' time. If you have just tuned in, please hit that like button on your way in and say hello in the chat. I'm looking at everyone coming into the chat right now. Yolanda's here. Mark Pierce is here. PB is here. Tidy Big Dog. Martyn says, I've just made some trades. See Electrum and Discord. Martyn has just shared with you some trades. I might have a sneak peek, but not share it on the screen. Let's have a look. What's Martyn doing? I am just going over to Discord, clicking on Martyn's trades, and I can see exactly what Martyn's trades are. Oh, okay. Should I give you a hint? It might have something to do with crypto. So go and check out. You get it on Electrum and on Discord. So go and see what Martyn's been doing. Oh, I've just entered a chat. I didn't mean to do that. Go see what Martyn's been doing this morning and getting ready for the report. You can see all of Martyn's trades on Discord. Who else is here? XRP at 142. Yes. Look, there is going to be a bounce in crypto. We've been saying there's going to be a bounce in crypto, and here we are. We're getting a bounce in crypto. It's been beaten up, and there's going to be volatility. I've even said Bitcoin can go as high as 100,000, 98,000 before it puts in a lower high. I do think ultimately we go lower, but I think obviously we're due some sort of bounce because of how oversold we've been. Again, that's not guaranteed, but that's my opinion. Waiting for Mr. Sensei, says Jacko. DJ Haynes says, hi everyone. Zach Zate is here. Okay, everyone's here. Let me know if you're in. 53 likes and 163 watching. Don't be lazy. Hit the like button. Thank you, Ricardo. Okay, let's get into today's top stories. And start the show. So oil prices. These are the top stories. You get this. This is even the free members of the newsletter get this, so it's so important to get to even be a free member of the newsletter. I'll give you the link if you want to go check it out, because you get the morning brief and sort of the stories at a glance, so you can really see just with a snapshot what's going on in the market. So oil prices surpass $100. Brent hits $100 while Goldman Sachs delays rate cuts forecast until September. Iran conflict escalates further. Trump prioritizes nuclear prevention as Iran threatens to keep maritime choke points closed. US redeploys Asian defenses. THAAD systems are moving to the Middle East, sparking regional security concerns. US tanker crashes in Iraq. I
can't believe this!
Paul D has become a bronze member. We love it.
And Paul 8168 has become a member.
Thank you, Paul D. 4 crew members confirmed dead and 2 missing after mid-air collision during intensive aerial operations. Adobe CEO Nareen resigns. Shantanu Nayan will resign as Adobe faces fears regarding AI disruption. We can see the stock has fallen today. A major economic data release. Critical inflation data arrives today, setting the stage for next week's FOMC meeting. I can't stress how important this data release is because it's the last thing that the Fed will take into consideration when they decide what they do with not only rates next week, but with their dot plots, with their um, summary of economic projections, with their future rate cuts, and the tone of Jerome Powell's speech and what they discuss in the FOMC minutes. So it's less about what's actually going to happen next week. They're going to pause. It's more about what all of this data piece is going to affect a lot of things because it's the last major last data release before the FOMC and all of the other things come out. So very, very important. And it's also the last data release before we're going to start seeing, or potentially the last data release before we start seeing the Iran war being priced into all with inflation and oil prices. This is January's data. January's economic data, what we'll do is we'll actually go down to the deep dive. We don't have to read that right now. The number that matters is 46.8%. Why is that the number that matters? Well, you need to start getting used to these numbers now because it's not all rate cuts this year. It's worse than people anticipated, sort of what me and Martyn have been saying, which is the CME Fed Watch Tool data now shows a 46.8 probability that the Federal Reserve will not cut interest rates at all in 2026. There's now literally a 50-50 that there won't be any rate cuts this year. That's how quickly this has been repriced since we've got the Iran oil crisis. Plus, it was already at maybe 20% before that. So get ready for potentially no rate cuts this year. Get ready for potentially rate hikes this year. Or best case scenario, you might get 2 rate cuts. Winners and losers, Citizens up, LSB Industries up, Lightwave Logic up. Input Limited collapsed 80% after independent data monitoring committee for its pivotal phase 3 trial of the drug. First line lung cancer recommended discontinuation for fertility effectively gutting the company's lead pipeline asset. They're down 80%. Some people will find value there. KinderCare down 30%. EverCommerce down 22%. Par Technologies down 26%. Again, Adobe down 9% today. That is going to be on a lot of people's radars today. If we have a quick look at Adobe's chart before we come on to the main event of today, which is the data release and getting prepared for it, you can see we've had a bit of a drop after earnings yesterday. Down 2% yesterday, down 7.8% in the pre-market. So Adobe now sat at $150. Again, some people are going to find great value in that because it wasn't that long ago that Adobe, back in early 2024 and 2021, it was at $675. So Adobe has already dropped, and it's at the levels of 2020. It's dropped 64%. So maybe I should start looking at it. I might do a stock analysis on Adobe because I love seeing stocks at 2020 lows because we normally get a bounce. So we'll have a look at it. Of course, it's a downtrend and you don't just buy things that go down, but it could be certainly a bounce due for Adobe after their earnings. Anyway, we'll come back to that later. Let's go over to Bloomberg. Nothing there. Okay, shipping comes to a near halt in the Strait of Hormuz. That hasn't been sorted yet. There was rumors of ships being passed through. That was incorrect. Let's continue with the newsletter, and then we'll come on to data release. If you have just tuned in, please hit the like button, subscribe if you haven't done so already. Mark Pence says, dang, Adobe. Yeah, Adobe, a big drop. Oil smashes through $100 again as Goldman warns the worst isn't over. Goldman Sachs saying the worst isn't over. Brent crude settled at $100 per barrel yesterday. That's the first time it's actually the global benchmark has closed above $100 since August of 2022. Of course, we've been above $100, but the daily candle closed above $100. That means it's actually essentially. Obviously, it does mean something in the technical chart world if you close above a certain level, but it's also just saying, look, it's actually we're getting more and more data to suggest it's staying above $100, and that's what it's showing. It's showing strength above $100. And that's the issue. The issue is, how long does oil stay up? People are now saying even if the war ends tomorrow, we're going to have lasting effects. And we are going to have lasting effects. But ultimately, if the war ends tomorrow, it's going to be short-term volatility that the Fed are going to look through and most people are going to deal with. And it's just going to be a one-time effect to inflation and other areas. But it's still going to have an effect. The issue is if we go on longer than expected, which we're approaching week 2, are we now? Let's see how it continues. West Texas Intermediate WTI, the US benchmark settled at $95, up 9.7%, the highest level in nearly 4 years. WTI traded in a range of roughly $43 over the course of a week, with the wildest seen since the pandemic chaos in 2020. We saw the swings and roundabouts with oil. I'm going to skip through these stories because we want to come on to the data release, but I do recommend everyone goes and read these stories. We've got some 5 major stories. If you want to go read it, just go to sensei.news, and there is a paywall further down in the newsletter, but you can read most of these stories for free as well, or sign up to the free trial. The link is in the live chat. Into week 3, Khamenei breaks silence. Trump signals major escalation. So there is slight reports coming out that obviously this was not announced as a regime change war, but that did seem like some of the objectives of Netanyahu and Trump. And what so far happened is the Ayatollah Khamenei has been replaced with Ayatollah Khamenei. So not much progress on that end. But now there's reports that potentially he is in not a great condition. Potentially he's amputated, and he hasn't actually appeared on TV, even though he's given an address via a TV reporter. So President Trump also tweeted yesterday that preventing Iran from having nuclear weapons is of far greater interest and importance to me than the cost of oil. Essentially saying, I don't really care about the cost of oil. This is a bigger issue, and we can bring oil down later. It was a blunt signal to markets that the US will not scale back military operations to relieve energy prices. Hours earlier, Moshtaba Khamenei, Iran's new 56-year-old supreme leader, made his first public comments since being appointed after his father was killed in the opening strikes on the 28th of February. Speaking through state television, he said Iran will keep the Strait of Hormuz shut as a tool to pressure the enemy, threatened to open new fronts when enemy has little experience, and demanded that all US military bases in the Middle East close immediately. Israeli Prime Minister Benjamin Netanyahu held his first press briefing since the war began, making a significant admission. The campaign has significantly weakened Iran, but regime change cannot be guaranteed without an internal uprising. We are creating the optimal conditions for toppling the regime, he said, but a regime is ultimately brought down from within. On the ground, the war continued to widen rather than wind down. At least 3 separate drone incidences hit Dubai yesterday. Let me bring Bloomberg on the screen just to see what these prices are. There we go. Hit Dubai yesterday. Drones fired at the international airport. 3 commercial vessels were stuck in the Persian Gulf in 24 hours, and foreign tracker carrying Iraqi fuel oil was ablaze in Iraqi waters, killing 1 crew member. The UK confirmed Iran has likely begun laying sea mines in the Strait of Hormuz. Hezbollah fired over 200 rocket missiles and drones at Israeli communities in a single day, prompting Israel to strike over 70 targets in Beirut over the past week. Back channels talks between Tehran and US allies are nowhere close to finding a way to reopen the strait. The human and financial toll is mounting. At least 1,825 Iranians have been killed, 3.2 million temporarily displaced, and roughly 2,500 people have died across the border Middle East. 8 US service members have died during the campaign, and approximately 140 have been wounded. US Central Command has struck around 6,000 targets since operations began. The first 6 days of the campaign cost more than $11 billion. Energy Secretary Chris Wright admitted on CNBC that the Navy is simply not ready to begin escorting commercial tankers through the strait, saying all military assets are focused on destroying Iran's offensive capabilities, though escorts should be possible by the end of this month. Overnight, the conflict escalated further. Trump posted that he was totally destroying Iran and wanted to watch what happens today, and told us to watch what happens today. Israel launched a new, what it called a new wide-scale wave of strikes across Tehran this morning. Iran fired a barrage of missiles at Israel and a dozen of drones at Saudi Arabia. And 2 people were killed in Oman by debris from a downed drone, drawing yet another country into the war's orbit. 2 things are clear. So watch 2 things for now. First, the mine laying in Hormuz. Mines are cheap, effective, and extremely difficult to clear during active combat, meaning the strait could stay commercially unusable for weeks after fighting stops. And remember, there's about 1,000 ships waiting to cross the Strait of Hormuz right now. Second, Khamenei's new front threat. The Houthis already control Bab el Mandeb Strait at the southern entrance to the Red Sea. If that choke point closes too, the last viable bypass route for Gulf oil disappears. The war premium in energy has no catalyst for compression until at least one of these dynamics changes. So we can see potentially a new Strait of Hormuz closing is in the Red Sea. It's not as extreme, but it's obviously very important as well. So we'll keep an eye on that. We can see pictures down there of the strait. There's a lot more information here. We've got US pulling missiles from South Korea. It's opening up a potential invasion of Taiwan from China. They need the missiles. They're running out, and they're bringing it from Asia to the Middle East. Obviously, South Korea is not too happy about that. Taiwan's not happy about that, but they're doing it. And also the incident yesterday of the US refueling plane crashing in Iraq with 6 crew members aboard. I believe 4 have been identified to be killed, and 2 are still missing. So we will keep you updated with that information. There is much more information in the newsletter. And also, Adobe CEO steps down after 18 years of as AI reshapes the creative industry. So what we're going to do is go down towards our deep dive section again. I'm not going to go through the whole cheat sheets, but what one main benefit for the newsletter members is they get to have the cheat sheet in front of them while all of this data is coming out. But also, we won't show the whole cheat sheet because it's for the premium members. But essentially, data mega drop. And there was a lot of data coming out in 34 minutes time. So if you have just tuned in, if I can ask you to please hit that like button, subscribe if you haven't done so already. Let me quickly go over to the live chat. We've got some information coming through. Oh, something's going on. Is Spinning Donut Man here from Discord. You may be engaging with a fake Martyn Lucas. I friended you as you have left the server. Now you have left, you are vulnerable and I can't reach or help you. It looks like Donut Man. If you're here, if that's your name on Discord, you've probably been approached by a fake Martyn Lucas. You have left the real server and you're about to get scammed potentially. So please be careful. Donut Man, are you here? We can help you live. Obviously, this is us, the real Martyn Lucas and Sensei here because we're live on YouTube. So please be careful. And just a warning to anyone, we don't message you. We don't privately message you. We don't ask you for your money. We don't ask you to move your money around. We don't tell you to tell us about your personal life. We don't tell you to invest in a cryptocurrency. We don't give you financial advice. We don't tell you what to do. Oh, the Nutella. I got scammed also, Discord. The Nutella. Martyn has made upgrades to the server. He's completely made it paid only, so only paid members can enter and reduce the scamming. But please be careful, the Nutella. I hate to hear that. We do try out. We do the most we can do. It's up to you guys to be aware of these scams. People will pretend to be us. People will pretend to be Martyn mainly. Then they'll pretend to be me. Then they'll pretend to be Vaz. And they'll message you and they'll try and be convincing. And what they'll tell you to do is move money around or invest in a crypto or change your settings. Don't do it. We don't give you demands. We don't tell you what to do. We don't tell you to invest in a cryptocurrency. We don't tell you to change your settings. most of the time we don't actually have time to one-on-one message people, so we're not doing that. Please be careful. Yeah, we're all good, says the Nutella. Okay, I hope it wasn't too devastating or too big of an amount. Still lost all my XRP, says the Nutella. The Nutella, that's awful to hear. I don't even know what to say. That is, yeah. I mean, we've all been scammed in our lives, but I don't like hearing that. A really good scam. The Nutella, if you want to share the details on Discord and help other people, then that would be great. God, I hate these scammers. I don't know what to say. So let's continue with today's story because we're now 30 minutes away from. I'm going to put the link to the No Hard Feeling. The Nutella, Martyn's done the best he can do to protect the Discord. He had to make a hard decision to actually remove some of the founding members of Discord, but to protect the wider community. So let me put the. I'm going to pin the link to. Incredible. Please read the rules before you come onto Discord. Says to Minglis. Yes. Okay. So guys, how many people are watching and how many likes do we have? We've got 264 people watching, and mine says 16 likes. Let me refresh that because that can't be right. 264. What is going on with the likes today? I'm not going to give you all the cheat sheet before we get these likes up. I was about to give you all the best data, getting ready for the biggest data release of the year, ahead of the FOMC. But I've just looked at this. I've refreshed it. I thought the numbers were wrong, but they're right. We've got 270 people watching and only 79 likes. We can get that up to at least 100 likes. Can everyone take a second to hit the like button? We'll play Phoenix. Don't disappoint me. Let's get out to 100 likes.
Until one day, a young man catches fire. This is
Let's do it. 29 minutes until the data release. 92. We can do it in a second. Let's do it. Smash it, smash it, smash it.
You've been knocked down and got up again. In a corner, you're surrounded, no defenders.
Are we going to do it? 2 more likes. We've done it. We've done it. Can continue smashing that like button. Thanks for engaging in that. Continue to hit that like button if you haven't done it already. Okay, you guys, you hit the like button, so I give you the information. Let's do it. Very content. Just answering all the questions. Don't feel bad. The scammers get a lot of people. Just remember what happened to try and spread the message to protect other people. Yeah. It only took my 11,000 XRP. Oh my god! If it took 11,000 XRP from me, that would be awful. I mean, I didn't. God, I think that's more XRP than I have. 11,000 XRP. God, the Nutella man. I'm so sorry I had to go through that. Please try and help other people and share your story. Deep dive. The the data mega drop. Your cheat sheet for today's release. Today is not a normal data day. A 43-day government shutdown in late 2025 delayed multiple major releases, and they are all landing at once this morning. At 8:30 a.m. Eastern, markets will digest gross domestic product, the core consumption expenditure price index, and that's the Fed's preferred inflation gauge, personal income, personal spending, and durable goods order in a single drop. So all of that is coming in 28 minutes. The Federal Open Market Committee meets in 5 days. This is the last major inflation data point they will see before deciding on rates and updating the dot plot. So let's set the scene. The economy is in an uncomfortable spot heading into this release. Inflation has not come down the way the Fed hoped. Core personal consumption expenditure has been drifting higher since mid-2025, rising from 2.6% year over year in September to 3% in December, the highest rates since March 2024. The monthly reading jumped to 0.4% in December after running at a benign 0.2% pace for most of the year. The January minutes, remember we covered the January minutes. Everyone said, why are you covering the January minutes? This is boring. This is not the real FOMC report. Actually, it was so much more insightful than the actual FOMC report. And because everyone was distracted by the new Fed chair. That was all the questions they were asking about to Jerome Powell, and that wasn't what was important. What the Fed minutes revealed was very blunt. Most participants cautioned that progress towards 2% inflation might be slower and more uneven than generally expected. And they judged the risk of inflation running persistent as a above target as meaningful. Several members, and several means more than three. When you look at the Fed language, you have to see when they say a few, a couple. We're looking at least probably around five, six members even wanted to keep rate hikes on the table as a possibility. No one believed them, and now we're looking at the markets and they're actually pricing in potentially rate hikes. The labor market, so that's inflation. The Fed is saying inflation is heading down, but it's not as we expect to see it. It's a little bit sticky, and maybe we should keep the idea of rate hikes on the table. And then the labor market, the jobs market, by contrast, is not a problem right now. The Fed described conditions as stabilizing. They removed specific language in the Fed minutes. Unemployment is pretty steady at 4.4%. We're not having the same risks that we saw maybe mid last year that spiked the reasons for rate cuts. The vast majority of members judged that downside risks to employment had moderated. So again, not as concerning. Hiring is weak. That is clear. People aren't hiring. And payroll growth has been soft, but the Fed is not alarmed by it. No one's really firing people. They're just not hiring at the moment. The concern is inflation, not jobs. The Fed cut rates 3 times in late 2025 and then held in January, leaving the Fed funds rate around 3.5 to 3.75%. Chair Powell acknowledged at the January press conference that it was hard to look at the data and said that the policy is significantly restrictive right now. Two members dissented, preferring a cut, highlighting slight internal tension. Adding to the maybe Bloomberg is going to go live or something in a second.
Investors are giving this bull market the benefit of the doubt.
If this is really like a 4-week
We'll come back to Bloomberg. Let me just make sure we are up to date with Bloomberg.
Jill, here we are 4% away from all-time highs. What do you think is really anchoring the more constructive view that's keeping this equity market somewhat range-bound?
Well, we did see, some inclination to buy the initial dip last week, like I mentioned. So there has been those inflows. We've seen oil spike, but still under the $100 a barrel level. That obviously starts to get more risk.
We'll come back to Bloomberg for the data release. In fact, we'll have the data release first ourselves, and then Bloomberg will be a little bit behind. But we'll I'll tell you right when that data does release in 23 minutes time. So, guys, if you could please hit the like button, share this out to anyone else who might be interested in the biggest data release of the month. That would be of the year so far. That would be great. Adding to the complexity is a military conflict with Iran. Operation Epic Fury, starting late February, has sent oil prices surging and gasoline above $3.5 per gallon. Trump's 15% global tariff took effect on February the 24th. Neither of these shocks will appear in today's January data. So don't think that we're looking at inflation and it's what inflation is today. It's always looking previously. And because of the shutdown, we're actually looking at January's data. So neither of these shocks will appear in today's January data, but they'll dominate the forward-looking narrative. So we want to see what's actually going behind the scenes before we actually get the oil spike in. And if you're looking at the chart of oil, which I'm showing you here, this is just in the last sort of, what they're saying, the last 13 days. So you can see we had a pump of 30%, then a dump of 35%, and then now another pump of 25%. Very volatile on oil. This is what I've been saying. Oil is going to be volatile. We identified a double bottom at about $55. We identified the break of trend at 65 and then 73. And then the war happened, and then oil only went up 5%. To me, that was ridiculous. The chart said it's going to go up. A war has started, and we were only at 5%. So what did I do? Well, I posted this on the private member Substack. Again, I don't post really all my trades on Substack. We do have a portfolio challenge, which I do, which we do follow, and I do post my trades, but mainly the research for those trades in the portfolio challenge. This is my personal portfolio. I just wanted to share it. So sometimes I do share this, just like I shared my crypto buys back when we hit the 200-day moving average. Anyway, this is what I did. I shared this. We went on to Polymarket, or I went on to Polymarket. I knew that I was very confident oil was gonna spike. I thought we were gonna get to $80, $90, $100, potentially $110, $120. But I didn't know if we're gonna stay there long term. I didn't know what date we're gonna hit there. I thought it's gonna be before the 31st of March. I didn't want to play around with the call options. I didn't want to really open a long position. And this seemed like a perfect way to get involved. Obviously, there's risks with doing this. There's specific rules that need to come in place and all the other things. However, as you can see here, this is not even the profits. This is just the profits on the first day. The first one, as you can see, crude oil hit $120, and it did hit 120. I put $20 in, and the to win was 197. I did take my profits earlier than that because I took it before the Sunday it opened, but it was very close to that. I think it was 180, $185. Essentially meaning that it was a 1,000% move up. It was a 10x on an oil trade. So I do share that in the premium Substack. So I do recommend, if you are a Substack member, you have the Substack app, because I do post these things and sometimes you might miss it. If you want to see all those trades, and again, I did it for $100, $110, $90. The odds were very much in my favor on that trade for oil. And the reason I did it this way is because I said to you guys, we've been following oil for a while, $50, $55 on the charts of the day as the double bottom, and yeah, benefited from that. So let's go back to the news, and this is the volatility I was talking about, and that's why I prefer to do it in a way of, if it hits this amount, I win on the trade. So what are the numbers heading in? The Fed, again, 20 minutes now. Jobs data, GDP data, PCE, inflation, spending, all of this data coming out in 20 minutes. So get ready for the markets. Let's just make sure we've got our markets lined up nicely. Yeah, we've got the S&P 500 over here. We'll see how that reacts. We've got Bitcoin on the right. We'll see how that reacts on the data as well. March 18th, FOMC. Next week, FOMC report. What are they going to do? There's a 99% chance of a hold, as expected, as predicted, but that's not the important part. We need to see what the speech is. We need to see what the minutes are. We need to see what the questions are, the press conference. So worth definitely tuning in for. We'll be covering it live on the show. April 29th, FOMC. That's flipped. 96% chance of a hold. First meeting with actual meaningful cut odds is September 2026, and that's still not over 50%. There's a 41% chance of at least a 25 basis point cut by then or including then. So June is now only pricing at 20%. So even in September, we're not looking by September to have a rate cut. So there's actually now a 46.8% chance of no rate cuts at all this year. A 38% chance of one rate cut and a 12% chance of two rate cuts. So the most likely scenario, according to the Fed Watch tool, is no rate cuts this year. Now, is the data today going to change that? Well, quite possibly, because we're getting a lot of data coming out and the Fed likes to look at data. Let me refresh this page so that we can actually see that. Yeah, perfect. Yeah, we saw the CPI that was in line, 0.3% month over month, 2.4% year over year. Let's see what PCE will be today. Remember, PCE inflation is probably the top thing I'm looking at today, because PCE inflation is the one thing that the Fed are most worried about. And PCE, again, the CPI, PCE, PPI, PCE is the way the Fed prefer to look at inflation. Mostly any fault. Let me just read some questions. Mostly my fault and possible. He's reading this right now. Oh, yeah. Polymarket. What's the prediction market say? Fed decision in March. 99% chance of no change. So we know that. Don't be thinking we're going to get rate cuts next week. We're not. How many Fed rate cuts in 2026? Well, actually, Polymarket's pricing a little bit differently. There might be an opportunity here, suggesting that there's only actually a 26% chance of two rate cuts, 31% chance of one rate cut, and a 23% chance of zero rate cuts. So Polymarket is actually saying there's a slightly bigger chance that we at least get one rate cut. They're saying the most likely outcome is one rate cut. The Fed Watch tool is saying most likely outcome is no rate cuts. And then here's the big one. Will there be a recession in 2026? Well, there's about a 33% chance. And that is creeping up. About a couple months ago, I said that the chances are 30% and above, and by at that point, it was only around a 15% chance. Now that's creeping up. I would say probably I would agree with Polymarket, maybe a 35-40% chance of a rate cut of a recession. So yeah, we'll see if that comes to fruition again. If it's that high, if I think it's about 40% chance, then I'm obviously going to be prepared for that scenario. Because if I would like to take advantage of prices if they come down 20, 30, 40%. Anyway, let's continue. So core personal consumption expenditures price index, January 2026. This is the most important number today. The core personal consumption expenditure price index strips out food and energy to reveal underlying inflation. It is the Fed's explicitly stated preferred metric. We know when everyone says the 2% inflation target, well, the definition of that 2% inflation target is based on PCE, not CPI, not PPI, PCE. So this is the metric we're looking at. And where we will be looking at it will be on this page here. So you can see all of this. Let me just remove the chart for a second. All of this, you see how many 16 minutes there are. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 pieces of data being released in 15 minutes time. 14 bits of important data. I mean, none of these are, they're all orange or red, high impact or medium impact. And medium impact in the US is higher impact than high impact outside the US. So these are all important metrics, all important releases. And there's that many of them coming out all in 16 minutes. So be prepared for this. And the best way to be prepared is always having that cheat sheet and understanding it, because you can have it in front of you. If you want that cheat sheet, you can still get it now. There is the free trial for the newsletter. This is the most important number today. So the first number I'm looking at is PCE core. Take out the volatile parts of it, and we've got two numbers. They're right at the top. So when the numbers come out, and I'm on this screen, look at right at the top. Core PCE, month over month, year over year. They're highlighted in red. They're probably the most important bits. We'll also look at GDP, which is probably just under that. But these two are very important. Consensus is 0.4% and 3.1%. 0.4% month over month, 3.1% year over year. Above that, the market's not going to like it. So below that, we might get a little bit of a relief. So that is the biggest number, and that's what we want to see at 2%. But you can see we're at 3.1% still. We still haven't gone back to 2% in years. And obviously, that's a concern for the market. So how it differs from CPI, let's just skip past that for a second. Where has it been? So core PCE ran at a benign 0.2% per month from May to November, and then it spiked in December. And today's numbers are going to be so important because we were so flat, and then we spiked in December. So today's numbers is going to tell us if that spike was a blip or start of something worse. The red flag, January PPI was pretty bad, scorchingly hot. Core producer prices came in at positive 0.8% month over month versus 0.3% expected, with services surging 0.8%. Several producer price components, especially healthcare and portfolio management fees, feed directly into PCE expenditure calculation. This strongly suggests today's core reading will be firm. So if you look at PPI, remember, PPI was here. We got January's PPI numbers. So let me highlight that. We got January's PPI numbers, and they were very hot. Very hot. And what is PPI? Well, PPI is sort of what the businesses are paying, and that normally gets passed on to consumers. So it's sort of a look into the future on what CPI and PCE will be. And it was 0.8%. compared to what was the consensus, which is 0.3%, a major difference. So the idea is that might be shown in PCE now as well. So the consensus is slightly higher than you would expect at 0.4% and 3.1%. It's already priced into the market that it's going to be a little bit hot. If it does come in at that, it's not brilliant because it's still showing sticky inflation. If it comes in above these numbers, and again, the reason I'm spending so much time on core PCs is because this is the most important number we're going to get. If it comes in above 0.4%, and above 3.1% year over year, that is when we could be in for a correction market and a continuation of the downtrend. Because as I've been saying on the channel for the last 3 months, remember 7 months ago I said the bear market started in crypto. 3 months ago I said the S&P 500 looks like it's topping out, and over the last few weeks I've been saying this is going to accelerate. In my opinion, again, this is my opinion. So I might be wrong, and I'm prepared to be wrong. Even though I think the market's going to go down, I'm prepared for it to go up. How am I prepared for it to go up? Because I'm invested in the market. Most of the time, you want to be invested in the market, but I've also got money on the side by the dip. There is very many ways you can play this, and a different way of playing it is look at what Martyn's done. He's bought with conviction, and you've seen the swings in his portfolio towards the upside. So I'm not saying my approach is the right way. I'm saying this is how I'm doing it, and this is what's right for me. And what's right for you might be might be different to me, might be different to Martyn. But you can see different strategies work. And I'm still up on the year to date. Martyn's made 25,000. Was it 25,000 in a day? A couple days ago. His portfolio hit 500,000. I mean, go check out his trades on Discord. Let me continue with this. So the core month over month was 0.4%, and core year over year was 3.1%. Sorry, that's the consensus. That's what we're looking at. The more we deviate from that, and what I mean by deviate is the further we are away from those two numbers, 0.4% and 3.1%, the bigger the market's going to move. And if it's towards the upside with the inflation, the more the market's going to crash. The lower it is, the more the market's going to pump. So Oxford Economics Nowcast model, which is has a strong historical accuracy record, also points to 0.4%. So most likely, we are going to get 0.4%. If we get above it, then it'll be really concerning. And again, we do have this chart for the premium members, which I'll leave for the premium members. You can see the core PCE monthly trend. It's been pretty steady since March of 2025 to November of 2025. December is when we had the spike, and that's not what the Fed wanted to see. And then if you actually look at core PCE year over year, the 10-year view, that's what we're at. Look how steady it was between 2016 and 2021 at 1.5%, below the 2% target, around the 2% target, or just around the 2% target, which is what you want. Then COVID happened, and look, we're still not coming down. We were coming down. Then the tariffs came into play, so inflation was coming down. Whether you like the Biden administration or you don't, inflation was coming down, and then it stopped. And many people cite the reason it stopped was initially tariffs, and then tariffs again. And then everyone says, okay, it doesn't matter because it's just transitory. It's a one-time effect. But now we've got oil. Okay, then it's transitory. It's just a one-time effect. But essentially what you see is two levels up. You see this level over here is up here, which is way above the 2% target. And over here, back in 2016 to 2020, where it was at this 2% target. So this is what's concerning. This is what the Fed doesn't like. It's been above 2% way too long. And if we're going to get more data to suggest it's just going to stay around 3%, that's when the issue comes in place. Gross domestic product second estimate. So we're also going to get GDP. This is the second most important thing I'll be looking at. If you have just tuned in, lots of data being released in 8 minutes time. I'll give you the rundown. Hit the like button, subscribe, get ready for some volatility in the markets. GDP second estimate. We got the first estimate and it was awful for the growth of the US. So the second estimate of the fourth quarter we're getting today. So we already know where we're looking. We saw 1.4% in the first estimate, so that's what the consensus is going to be. If it deviates from that, then depending on which way it goes, it will affect the market. So last time we covered it, it came in at 1.4% annualized. Why was that so concerning? Well, because the consensus was 3%. So GDP, the growth of the US economy, was projected at 3%. We got 1.4%. But the headline was heavily distorted by the government shutdown, which caused federal spending to collapse 16%, dragging 1 percentage point off the total. Private domestic final sales were a healthier 2.4%. So this time round, we're getting the estimate again. And it's a second estimate, but the consensus is unchanged from the advanced estimate. So 1.4%. If it's going to be higher, then the market's going to say, actually, yeah, the economy is strong, no chance of recession, whatever, that's great. If it's lower, then we'll be concerned. But this is a second estimate, and that's the second number I'm going to be looking at. And again, if it's revised up, economy is more resilient. We might not get rate cuts because the economy is resilient and we don't need rate cuts and inflation's high. but it's still good for the economy. If it's in line, 1.3, 1.4, 1.2, it's not really an event. We look at what PCE is saying. If it's revised down to under 1%, then that's when the recession concerns will rise. That's when the stagflation risk occurs. So GDP, we kind of want it to be at consensus or above, really above consensus. That'll be great for the markets. Even though rate cut probabilities will come down, it's actually more about let's not head into stagflation or recession. So that's that. You can see the GDP quarterly trend. We don't want 2 months of negative growth because that will be recession, and that's not what anyone likes. So let's continue. Personal spending and personal income. Guys, if you have just tuned in, 6 minutes, and we're getting the biggest data release. I don't know why everyone's not hitting the like button. Let me know if you're in the chat. I am constantly watching the chat. Let's see if the chat can roll a bit more. Do we have a poll running? Has everyone voted in the poll? Okay, let's just do a simple one. Let's get the chat rolling. If you think we're going to pump after the data release of 6 minutes, spam 1. I'm allowing you to spam. I'd like everyone to hit 1, 1, 1, 1, 1 if you think it's going to pump. If you think we're going to dump, 2, 2, 2, 2, 2. Spam the chat. Make the chat go crazy. I want to see the chat rolling again. The chat's right off to this over here, and I get to see all your names come in, and I love seeing everyone here. It makes it feel like I'm not just talking to a camera. It makes it feel like I'm actually talking to all you guys, which I love. So spam the chat. 1, 1, 2, 2. Okay. Pump is 1. Dump is 2. Is there going to be a number 2? Are we going to dump? That was a bad joke. Or is it going to be a pump? Number 1. Oh, 2. Let's yeah. Let me just show you this. The chat is rolling. The chat is rolling. So most people saying 2 dump. Let's see. Let's see. I mean, that's the direction the market's going in right now. Let's see. 1 or 2. 1 is pump. 2 is dump. 2, 2. Oh, it's there is a few ones though. There is a few ones popping in. Most people saying 2 though. Most people saying 2. Okay, keep it running. If you haven't voted yet, there's a poll, and keep the chat going. What helps silver go down? What helps silver go down? Oh my god, we've just got a super chat. I'll come back to the data release. I'll give you all the information. Let's just go and see this.
Geopolitical tipped MX $200 through super chat. Friday 13th. Today's passion fruit margarita day. Thank you, Mr. Sensei, for the analysis. Hope you have a blessed weekend. 100 emoji, 11,111.
I love it, Jacko. Thank you so much for the super chat. Thank you so much for your support. I absolutely love it. It's passion fruit margarita day. Enjoy, Jacko, in your time and play at the Common. Sending you all the best wishes. Thank you, Jacko, for that. Incredible. Okay, 4 minutes to go, guys. We've got lots of 2s in the chat. People are saying we're going to expect to dump. Let me just run through it, a couple more bits, and then I'll give you a full synopsis, and then we'll give you the data straight here. So hit that like button, subscribe if you just come in. If you want the cheat sheet and the newsletter, the link is in the live chat. You get a free trial. I'm giving you a free trial. You get all the benefits: the daily newsletter, the cheat sheets, the charts of the day, the portfolio challenge for the 5,000, the chart training course, the app, the one-on-one DM access. I mean, there's so much in the newsletter, and you can get a free trial right now. So the personal spending and personal income, we're also getting that as data. So personal spending measures actual customer expenditure in dollar terms. Consumer spending makes up 68% of GDP. So this is the demand side. So we're getting personal spending and personal income, another data point. The consensus for personal spending, and consensus again is what the market's priced in, is plus 0.3%. The income consensus is plus 0.5%. Income is expected to outpace spending, which is unusual and notable. Let me just skip to what it actually means. So if spending comes in at 0.5% and above, and income comes in at 0.5% and above, that's sort of the best for the growth. Again, it's not great for rate cuts, but right now we're not too worried about are we going to get rate cuts or not. We just don't want to enter a recession. So that strong demand, spending up, income up. So remember, the consensus for spending is 0.5 and income is 0.5. So if we get spending come up to 0.5 and income stay at 0.5 or slightly above it, then that's growth positive. If it's in line, then again, it's a non-event. Continuation of the trend, income outpacing spending is healthy. You want your income to outpace your spending, because if your spending is outpacing your income, then that's an issue, and that's over here. So if you see spending less than 0.1% and income above less than 0.3%, then what you've got is consumers pulling back, and that's what adds to the recession fears. Again, it's great to have the cheat sheets in front of you because it can get complicated with stuff like personal spending and how they link together, and personal spending and income. But the good news for today is the most important is PCE and GDP, which are pretty easy to gauge what's good and what's bad. We're also getting durable goods order, and you've got the news there. Subcomponents to watch is super core PCE, health services, financial services, and insurance. We are going to go over to combo matrix now. Just before we do, let's just line up everything. So let me go and get Bloomberg over here. So what I'm going to do, and I recommend everyone does it, is make sure you're live. Press the live button. And the next thing to do, if you like, is press settings, playback speed, and increase your playback speed so you're right up to date with me. I'm right up to date with Bloomberg. So we'll come back to Bloomberg for the numbers. We'll also be going over to this screen, which will show you all the different, you can see all the data releases coming out in 2 minutes. All of this, I think 14 bits of data coming out in 2 minutes. The top two up here in red are the most important. That's PCE, core inflation, and then we've got GDP down here. Those are the first ones I'll be looking at. Let's just see if we've got some time to have a look at some more from the newsletter. The combo matrix. So the Goldilocks approach will be core PCE comes down a little bit. GDP revision is up slightly at 1.4%, and spending is at 0.3% up. That will show that inflation is cooling, growth is steady, consumers intact. That will be a risk on rally. The stagflation, the worst case scenario is inflation higher than 0.4%, GDP comes down, and spending is below 0.1%.
I can't believe this.
Thank you for becoming a member. So what could surprise PCE if it gets revised down from last month? Anyway, there is more information in the cheat sheet, but what we're actually going to do is I'm going to keep this up on the screen. I am going to go over to this screen where we get the data first, then we'll come over to Bloomberg. I have got the charts over here, the S&P 500 on the left and Bitcoin on the right. We'll see them react pretty quickly as well. Let's go over to the data. Breaking news, here we go. What are we getting? Let me turn Bloomberg on in the background.
Basis points, around 375 at the close just yesterday, and setting the tone for pretty much everything over the last 2 weeks.
PCE
this number right
is
here,
at
the price
consensus.
of a barrel of crude, Brent, at $99 a barrel,
down
and negative on the
much more
day
than
by
expected.
1 percentage point. Let's get that economic data for you. Mike McKee has PCE and more. Good morning,
GDP
Mike.
is really low.
A lot of important data, though, a little less meaningful
GDP
since the war has started. These are all January numbers. The personal income price index that the Fed follows up 0.3 during the month of January on a year-over-year basis. It slips to 2.8% from 2.9% in December. The core is up by 0.4, which is the same as expected and the same as the prior month, but we move up to 3.1% as forecast by economists. So that makes it much harder for the Fed to consider, certainly, rate cuts. Personal income up 0.4 during the month after 0.3 in December, and personal spending up 0.4, a little stronger than anticipated, same as in December. We also have durable goods orders. Durable goods orders flat on a headline basis, and ex-transportation up 0.4. Capital goods orders, non-defense ex-air, this is the core number that sort of goes into GDP. That is flat, no change there. And then we have the first update to GDP for the fourth quarter. It goes to 0.7%. from 1.4%. So GDP cut in half for the fourth quarter. Personal consumption fell to 2% from 2.4%. So a lot to look at under the hood. I'll get to debt. And John, I'm sure we'll probably see some market reaction.
Yeah, we've got a bit. Thanks. Let's go to the front end of the yield curve. You're seeing 2-year bond yields off the back of some of these numbers, lower by 3 or 4 basis points, 370 coming into today.
Okay.
The 2-year yield, the front end.
We're going to wait for their main analysis, which will come up in about a minute. But let me just tell you some of those numbers. So we've got core PCE. That's the most important number of today. It's in line. It's pretty bad. It's pretty high. But it's not what the market's already pricing for it. So that's fine. We move on to the next. GDP, the consensus was 1.4%. That's what we got last time, and that was pretty low. Now the revision is suggesting 0.7%. That's heading into very low growth in the US, potentially coming into negative growth, which could be signaling recession. So that's not brilliant. The market isn't really caring. The good news was that personal spending has gone up. So that will help get the economy back in shape. But income has gone down. So again, not the best thing to see spending going up, but income coming down compared to consensus. Again, those are those two numbers just above my head here. If I show you just there, personal income is 0.5% consensus. We got 0.4. Personal spending was 0.3% consensus. We got 0.4. So if we're looking at our chart here, so global, so core PCE was about 0.4%. GDP revision was less, and then spending's about 0.3. So it's hot inflation. Actually, what we've got here is it's somewhere between hawkish, manageable, and then stagflation / potentially recession. So I wouldn't say that's the data I would like to see. I wouldn't say this is data that makes me really confident and makes me change my opinion on the market and say, actually, you know what, I was wrong. The recession risks are quite low. The market is in a great situation. No, inflation's high. It's not heading down. GDP growth has just been halved. And personal spending and income isn't really painting the picture we want it to paint. So I wouldn't say this is brilliant news, but I wouldn't also say this is news to crash the market in a second or over a week. I think this just backs up the argument of we are in a stagflationary environment, potentially a recessionary environment, and I'm not prepared to be all in this market. Let's see what Mike McKee has to say when he's broken down the numbers a bit more.
Through that, John, it's going to take a few minutes to figure that exactly out, but it does look like at this point the consumer slowdown would have been the most of it because consumer spending is the largest part of the overall economy. I'll get that number. I'll get the government breakdown for you while you talk to your guest.
OK, Mike, we'll come back to you in a couple of minutes. Mike McKee there with the economic data. We're tracking a few things at the same time here, not just the economic data. Ongoing, a news conference from the Pentagon with the Defence Secretary Pete Hegseth down in Washington, D.C. This is what we heard from the UK Defence Secretary yesterday. The Iranians may have started mining in the Strait. We're hearing something very, very different from the Defense Secretary in the US.
The Defense Secretary says there's, quote, no clear evidence that Iran is laying mines. But if that's not the case, then you think it would be easier for them to, at some point, take on these naval escorts.
Let's go to that news conference. Breaking news, guys.
Republicans support the president's military action in Iran, but there's some consternation in parts of the party, particularly from your fellow Fox News alum, Tucker Carlson. He called the war disgusting and evil, and then said of unconditional surrender, which the president has called for, means foreign troops get to rape your wives and daughters. Have you heard these comments, and what's your reaction to them?
We're busy executing on behalf of great patriotic Americans with a clear mission that's 47 years overdue, and we're going to execute on that regardless of what people say about it. Yeah, right here.
You have said that the U.S. military has essentially aerial superiority, naval superiority over Iran, yet we're not escorting ships through the Strait of Hormuz. Why? How did you not plan for this?
We planned for it. We recognize it. Because ultimately we want to do it sequentially in a way that makes the most sense for what we want to achieve and ensure that we're sending the right signals to the world when we do so. So when Chris Wright speaks or we speak, it's based on a full assessment of what we're up against, what we want to say to the world, how that we want them to see and understand the conflict. It's like this whole idea of the war widening. That's what the press wants to make it look like it's widening and chaos is ensuing. No, we're actually closing in on grabbing hold of and controlling what objectives we want to achieve and how we want to achieve them. It's called shaping operations and setting the conditions. But when you shape the environment, you don't always tell. I mean, foolish political leaders and foolish military leaders of the past will hang an exact deadline on it. Or here's exactly when we'll do what we're going to do. Or here's how long it's going to take us. And then if you meet that, maybe you meet it. But if you don't, you fail. And if you're far beyond, we know exactly what we're shaping and why. We're sending those signals working across the interagency. The Strait of Hormuz is something we've paid attention to from the beginning. And the American people can rest assured we will ensure that our interests are advanced, no doubt. Yeah, right there, green jacket.
Mike Brash with the Washington Examiner. How many American casualties have there been, and where were the American service members when they were injured?
I mean, it's a bunch of return to duty. So we've had the large majority have gone in for some medical treatment and return to duty. We've had in Kuwait, Jordan, down across the southern flank a little bit, a variety of places, most from one-way attack strikes.
But I want to clarify that. I think what we've
And
tried to
Saudi
do here
Arabia.
is clarify those numbers rather than saying KIA or WIA wounded. Be more clear about that because the overwhelming majority, almost 90%, thank God, are returned to duty. Minor injuries returned to duty, and so that number can look a certain way, and our job is to add some fidelity to it. Absolutely, right here.
Russia, Mr. Secretary. Thank you, Mr. Secretary. David Zia, Real America's Voice. Can you share what types of munitions have been used on the attacks on commercial shipping? Have any hit mines? And are USVs, unmanned surface vehicles, being used? And just a quick follow-up, were there any arrests in Fort Campbell with the drone thefts?
I'm not familiar with the Fort Campbell thing. The strikes that Iran has taken on shipping up north in the vicinity of Kuwait have been, I believe,
Martyn
from
calling in. We'll
surface
come
to
back to this in
surface
just one
missiles up
second. Let's
there.
go over to this screen here. Oh, that's over my face. Let me get rid of that chart. 1 second, guys. Let me bring Martyn on the show. Welcome to the morning forecast, Martyn.
Good morning, Sensei. Great show, great cheat sheet, amazing information from the newsletter this morning. Spot on. I was reading it all morning. I did some trades this morning. I'm very concerned. I've taken some profit, some small profit. I've sold 6 Ethereum. I can now tell everybody that. It was shared on Discord and Electrum. If you want my trades ahead of time, they were shared this morning for everybody that I'd be doing that. I've now taken some money off the table, preparing now for the September-October major pullback, if not a recession. Sensei, if you can make me full screen a minute, I want to share with you some more detail, if you can do that.
Let me give it my best go. I should have set this up. Give me 1 second. Let me give it the best go.
You should just save these. You should just save these as scenes, Sensei. There you go. Just change the camera there. Spot on.
There we go. Let me change the camera to Martyn.
There you go. Brilliant. Thank you, mate. So I want to just show you this. As you can see, we are. Oh, hang on. That's which camera is it? Which camera? Let me change to this one. Which should be that one there. Done. There you go. That's better. So you can see there, look, I'm up 1.45 this morning. I'm tripling the market this morning, which is great. That's the number over here. We're beating the market again. We're beating Buffett again. Now, why is that happening? Or why have I done this? And why are we up this morning? Let me show you. This is so important. So what I've done, and I'll go back to here, I've just sold my Ethereum. Now, Ethereum is sort of still holding up. Just sold it there, sold 6 there, took a very small profit, only a few bucks really, but it's protecting me. I don't even care if it goes up or down. It makes a difference. I've still got 79. I've trimmed now, you can see $80,000 in crypto. I have not sold any of my XRP recently, but what I have done recently, I've gone more in on assets which I think and are proving to be resilient to oil and proving to be resilient for inflation and will outperform the S&P. So you've seen me, I told you I'd buy Nvidia, and that is up 1.15 on this news. GDP, not good. We could be heading to recession, but these are businesses that are relatively recession proof because they enterprise spend with each other. Doesn't mean they're foolproof, but we've got a $300 target here from Bank of America. For me, it's $250. I think that's a little bit aggressive, but nevertheless, that's how analysts see it. So I can probably double my money there. We've also got Google, my second pick. I've got $360,000 in Google, and that's up 0.91. These are the assets that I've said will outperform the S&P this year, and they are. So you can see I'm up nearly $4,500 today, 24,000 a couple of days ago, $4,000 the day after, another $4,000 today. We're outperforming on every single metric, beating the market every day. So this was a good trade, a winning trade. It was shared with you. You can bring me back to you now, Sensei, so we can have a quick chat. I want to be just really cautious now, folks. We've made a lot of money. We made 50, 60 grand last year. We're going to make 60, 70, 80 grand this year. We're going to double, triple, quadruple the S&P performance again this year. All of my trades are shared on Discord and Electrum. I get my news every day from the newsletter. This is how I trade, and then I train ChatGPT, as I've explained yesterday on the show. I am concerned that people aren't taking the oil spike seriously enough. I think people are going, oh, well, it's under $100. It went up a bit and then it's gone sideways. And don't worry, the American Navy can go in and protect everybody. You don't realize the knock-on effect. These things take time to come through the system. So we're gonna see a pullback this year. So I want to be at that point all in cash. Let everybody pump and dump these analyst ratings to 250, 300 and Google to 400. Let everybody do that. What I'm going to be doing is trimming on the way up, protecting my money. Remember, it's easy to make money. The hard part is to keep it. And before I hand you back to Sensei, take as much time as you need. I've got some very important phone calls to make this morning to my sources. I'm going to be on the phone for the next hour talking to Robinhood, Bank of America, other people. So I'm going to be delayed today. So take as long as you need. When you've done, Sensei, I realize you've got commitments of your own. Please then send to extra. But I'll be later. I'll be live later. And of course, in Discord. Talking of Discord, this is very, very important. Nothing upsets me more when I wake up in the morning and one person is left behind. If one person gets left behind, it spoils my day. Now, listen to me, folks. Whether you're on a phone, email, whatever you do, whatever communication you are on, there is scammers out there. No matter what service we provide or what services are available, people take advantage. Oh my gosh, just look, I'm now up $5,000. My portfolio is exploding again today. Lovely stuff. Anyway, please be careful. Something very, very horrible and something that makes me feel ill happened this morning. We have a Discord server and we have people pretend to be me. Why? Because they see me winning all the time. They see that I've got 700 paid members and every day we gain another 2 and every day we gain another 3 or 4 on YouTube. We've got a very proactive membership and committed audience. That's gold. That is gold for scammers. And it's completely avoidable. And I want to put this warning out today. Someone called the Donut Man joined yesterday as a premium member. He paid as a pro member and joined us on Discord. And then he sent me a friend request. My God, I'm up $6,000 now, folks. We're over $500,000. Sensei, over $500,000, $520,000 now. It's incredible, right? My portfolio is at 520 grand. Oh my God. That's not even my margin. My margin 200 on top of that. So it's 700 grand now. Will be $1 million within the next 12 to 18 months. Anyway, I'll go back to the most important thing. So this person's a pro member. He's talking to me, lovely. And then somebody else messaged him and he followed him. Now, I tell everybody over and over again, all of this is so unnecessary and so avoidable. Number one, me, Sensei, Vaz, Casey, William, all my team will not message you. You start the message. Number one. Number two, we will never friend request you. You friend request us. Number three, look in the roles, right click. Are they the owner of the channel? Well, of course they're not. There's only one me. Oh, I'm up $7,000 now. Number four, look at the username. Not the display name. Anyone can steal a display name. There are thousands of Elon Musks with pictures of Elon Musk. They steal my logo. They do get sued. I send them a lawsuit, and they end up paying $10,000 from my legal team. So don't go and do it. But if you do it, so it's on you. We will fine you. You will pay the price for that. So if someone messages you, someone comments you called Martyn Lucas, look at the username. It's at Martyn Lucas, spelt correctly. They can never spell it correctly because there's only one at Martyn Lucas on Discord, as there is in all the platforms, okay? But remember, I never message you. If after those 5 things, you're still not confident that you're talking to the real me, all of a sudden they'll say, well, would you like to verify yourself? Would you like to turn off friend requests or this or that and the other? Or would you like to send me some crypto? I heard this morning and I nearly rolled over in absolute panic. Someone said in the chat to Sensei this morning, I recently got scammed for 11,000 XRP, and that was okay. What the hell is that? That's about $30,000. It's not okay. You're giving your money to a disgusting parasite. Please be careful. I do everything I can to protect my audience. Sensei does the same. Whatever platform you're on, there are bad actors out there. Just remember the 5 steps I've just given you. And if you follow these steps, you'll be fine. What did this person do? He decided to leave Discord. Now I can't reach him. Now I can't contact him. He's now sat in a dark room talking to a very convincing scammer, and there's nothing I can do. So I'm here pleading. If Donut Man is watching, re-engage with me on Discord. Come in the live chat. Talk to Sensei. We will explain this again. We don't want anyone left behind. And if you think, mine, get off the show, Sensei's talking about inflation, there is nothing more important to me and everybody else in this family than the individual, the single person. Sensei will pull the plug tomorrow on his show. If he thought people were abusing his good name, and I would do the same. If I thought for a moment we couldn't help people and this was just about making money for ourselves, I would pull the plug and you wouldn't see me here tomorrow. We care about the individual. We're not bothered about inflation right now. We knew what was going on. I'm now up $7,000. I don't even need to look at my portfolio. We are confident on our trades. We don't need to stare at it 24/7. What we do need to do is take care of you 24/7. We are here for you. This is a family. We care. Please, please, please follow the steps. Be careful. And if there's any doubt whatsoever, before you do anything, jump in a live show. Talk to us. If we're busy, send a super chat. It only costs $1.99 and your message will be on the screen. We will see it. We can help you. We can stop you from losing your money. And so you can always have that safety net. Please do that. I know Sensei gets deeply affected by this. Someone used his name once and he was very upset about it. And it happens to me all the time and it's completely avoidable. Sensei, I want to hand it back to you. It's been a great morning. The newsletter this morning was so helpful to me this morning. It gave me the information, reaffirmed what I already knew, but it backed me up. I was very confident in selling. Some people say, yeah, but Ethereum's gone up now. You've missed out. I've not missed out. I'm up $7,000 now. I'm going to be up to $1 million. Always be prepared to take profit. Don't worry if the market carries on going. If you make money, you make money. There will be a pullback. There's no reason for crypto to pump right now. There isn't. The war is still the same. Oil is still an issue. Yes, we've got all these things. The military going to go in and protect the Straits of Hormuz. I hope I pronounced that correctly this time, Sensei, not hummus. Sensei does know, he is from Iran after all. Anyway, so I hope I got that right. Anyway, please be careful. Consider taking profit. I am now preparing for something much bigger because I don't want to be at $1 million by October and then the market crashes 40%. Imagine if I've got $1 million and it crashes 40% and I buy that. I'll be straight to 2 million on the next rally, won't I? Be careful. Take some profit. Don't get married to your assets. Always protect your money. Remember, it's easy to make money. The hard part is to keep it. Hand you back to Sensei. Was there anything you wanted to ask Sensei or are you good?
No, I love it. I will give my final thoughts and I'll send to extra.
Thank you very much indeed. I will be live again with you shortly and in about an hour's time. I got some very important calls. I want to speak to some very important analysts this morning. I'll be back with you in an hour or so on the channel. In the meantime, Sensei will send you to the extra channel, which will replay today's stream. Why do we do that? It's because we have members join us from around the world at different time zones and they want to watch the show live. You might say, well, it's not live. It's an hour ago. Yes, it is a restream, but for them, they've just woken up. But you can chat in the chat and talk to people. It's as best as we can, a best service we can provide. Bloomberg play the same old videos every night when they're off air. We play the day's events an hour or 2 or 3 hours behind. It provides a service for other members around the world to join in and be part of that. And if you're in there, I can talk to you and give you the link of when I'm about to go live and talk to you and say, look, I'm about to go live. This is what what I have. Always go to Extra after the show. While you're in Extra, of course, read the newsletter. It's a great time. While you're listening to the recap, you're reading the newsletter and getting updated. I believe Sensei dropped a great link in this morning where you could get a discount, a free trial, or whatever you want. Take advantage of that. The free trial, everybody should be on the free trial of the newsletter. It's fantastic. If you want to see my winning trades, I've never lost now in 3 years. Every single trade's a win. Every single prediction has been spot on for nearly 3 years. I've gone from 5 grand to 520 grand. I'm up 7 grand today, and I'm here for you, providing you the best information live every day. Accountable and verifiable. After today's show and after Sensei, I will be in Discord providing one-on-one support. If you want to join me on Discord, ask me anything. And soon we've got an integration coming, a bit like air miles. When you fly with your favorite airline, you get air miles. Shortly coming to Discord and the newsletter. Those that love the newsletter will get wonderful perks on Discord, and those that are on Discord will get lovely perks on the newsletter. It's getting better all the time. Please be careful. We love you all. We want the best for everyone. And it really upsets me when one person gets left behind. Sensei, I'll hand it back to you. Thank you very much for your time.
Thank you, Martyn. Thanks for all the information. Let's give you my final thoughts. We've just had the market pump. As you said, Martyn, I assume you're going to put the link for your Discord in the chat. I need to add that link to myself. So, guys, Martyn's going to put the link to his Discord in the chat. Go and check out his Discord. He did some trades this morning. There it is. It's already in the chat. Discord link. It'll take 10 minutes to get through security. Please be careful of the scammers. But I believe it's like $3.99 or $4.99 for the Pro plan. Go and check out the Discord. Okay, so recap for anyone who's just tuned in or who's been watching. We had major data release. Core PCE, inflation, the Fed's preferred metric, it came in at consensus, and consensus was already pretty high. It was already pricing in the PPI shock. So 0.4% inflation month on month, 3.1% inflation year on year. This is the number that the Fed wants to take to 2%. So remember that. Yes, we're getting some volatility in the market now, pump, dump, whatever it's going to be. Let's just zoom out for a second. PCE is the number the Fed's been trying to take down to 2% for the last 4 years, 5 years, or whatever it is. It's at 3.1%. That's not good. Then we've got the second most important number, which is GDP. Remember, 2 consecutive quarters of GDP negative. That's a recession, but that's already too late at that point to say it's a recession because you've probably already seen the market go down. So what are we getting now? Well, the estimate was 3%. Then we got 1.4% last week. Now the second revision, the consensus was going to be 1.4% because that was the first number that we got. And in fact, it's half. GDP cut in half. So that's the growth in the market. That's potentially signaling a recession. We've got personal spending up, personal income down. Again, probably not the right way you want things to go around. So the data, but then you've got some little bits of good data. We saw PCE, which is without core, so including core, including energy, it was actually down. So the market obviously likes that because if you look at all the inflation numbers and you look at consensus, it's down because the consensus was 2.9%, it was 2.8%, all the other numbers were in line. So if anything, it was below expectations on inflation, but only slightly, not something that I would take away and say this is inflation coming down. In fact, because it wasn't core, I wouldn't even take too much away from it because energy prices are going to be a bit of a shock in the next couple of months on inflation. So again, am I going to sell everything I own? All my stocks, all my private stock positions, all my S&P 500, all my diversified portfolio, and just get out the market because I think a recession's coming and I think we're going to get a crash. No, it's always best to be invested in the market. Am I going to buy? Am I going to be all in right now? No, because I think there is a chance of a recession and that chance is increasing. I think there's a chance of a downturn. I think oil price are going to be an issue. I think AI, there's going to be some cracks. I think it could potentially be a carry trade. I don't know which one of them is going to cause the market to go down, or even if it is going to go down. But because of my personal beliefs, And my research in the market is suggesting a downturn this year and a year full of opportunity. Even if we don't go down too much, I'm sure there'll be opportunity in the market. That's why I am sitting on uninvested cash, earning 4%. On a significant part of my portfolio, my trading portfolio. Remember, that's my trading portfolio, the £5,000 portfolio challenge. And my main portfolio is just long-term, low expense ratio funds. Anyway, that's that. If you want to see my portfolio, if you want to see the portfolio challenge, if you want to see the chart training course, if you want to see my last 8 years of mistakes, wins, and the simplest strategy, which I'm going to be releasing in the next 7 days, which is going to be very exciting, probably on FOMC day, in fact, if you want to put that date in your calendar. If you want to see the daily news, if you want to see the cheat sheets for all these events, you can get a 1-week free trial. So go and check it out. The link is in the live chat. You get there's a whole list of other benefits. The net worth tracker app. So many things. Go check it out. Let's just quickly, let me see if I can bring Bloomberg on the screen because we've got a few bits of news just come out. Pete Hegseth just had his press conference, which ended. Let me just go to, is this going to work? We're going to go to, oh, that's not going to work. Oh, God. Let me fix that. Again, behind the scenes. You normally see that on the stage events or the Substack events. Let's not do that one again. What was I trying to do? I was trying to do this. But no, not that either. I apologize. I'm just trying to get up some news from Bloomberg. Let me see if I can bring it across. If I go over to live chat. Go over here. I will come to your comments and then I'll have to end the stream. I need to be leaving the house any minute now. Here we go. Why do I need to log in? I've already logged in. Sign in. Trying to just get some Bloomberg information to you. Let me continue. Let me just sign in. What is going on? Why can't I bring this up? Let me just email myself a code. I apologize. I'm just trying to sign in to Bloomberg, but for some reason I've been signed out and I need to get myself a code and go onto my verification app. Got all these security measures in place. Just typing in the code now, then I'll bring you the news. There we go, finally. Okay, so these are the breaking updates from Bloomberg, from the breaking news. So one of the reasons the market's going up is that Iran, as I reported earlier today, but now it's been verified, Iran's new leader wounded and likely disfigured, US says. So let me just go and give you some of the past updates in the last half an hour. So 26 minutes ago, this is what we heard from Hegseth. We know the so-called not-so-supreme leader is wounded and likely disfigured, Hegseth told a press conference. He said the US was on plan to defeat, destroy, disable all meaningful military capabilities at a pace that the world has never seen before. Then the next update was some more headlines crossing. Hegseth says today is the largest day of airstrikes in Iran. And then Hegseth says there's no clear evidence Iran is laying mines. So we got reports of that yesterday from the UK. And Hegseth saying there's no clear evidence of that. And the market liked that because obviously oil is the big player here. What else do we have update-wise? Hegseth pointed to Khamenei's written statement issued yesterday as evidence of his condition, noting that the absence of a video or audio components. The defense secretary questioned why Iran's leadership would release only a written statement when Iran has plenty of cameras and plenty of voice recorders, suggesting Khamenei's injuries are preventing him from making a public appearance. Hegseth described the situation in Iran as chaotic following the death of Khamenei's father and the previous supreme leader. And people are saying, wow, this is so chaotic. Trump didn't plan for this. Trump loves chaos. Trump thrives on chaos. And that's what we've got going on right now. He's scared, he's injured, he's on the run, and he lacks legitimacy. Hegseth says, it's a mess for them. Who's in charge? Iran may not even know, the defense secretary added. And that is a video from Bloomberg. So yeah, Trump warns Iran to watch what happens today in the latest threat. Hegseth says today's going to be a big day. US says Iran's new leader is wounded and lightly disfigured. US confirms 4 dead in refueling aircraft crash. Israel says carried out large-scale strikes across Tehran. And European stock gain Brent crude around $100. Those are your final updates for the day. Thank you, everyone, for tuning in today's show. This was a big data release on Wednesday next week, FOMC day. So make sure you tune in for that. And there is actually PPI information data on the morning of FOMC day. So a big day next week. Be prepared for it. There is going to be a price increase on the newsletter in the next couple of weeks after the training course comes out. So if you want to get it now, then you can even get a 1-week free trial. Or if you replace the end Sensei with off 25, you can even get 25% off. So your choice. You can get all the daily newsletters, the ad-free experience, the charts of the day. Remember, we bought oil at $55. Then we bought it on a breakout $78 just last week or 2 weeks ago. We made 1,000% gain on that. Deep dive research daily. I'm going to be releasing a private credit report today on the newsletter, so keep an eye out for that. One-on-one DM access, the private community, the financial planning tools, the chart training course, and much, much more you can get as part of the newsletter. We're going to go over to Extra now. A quick scan of the chat, but I have to get going. Actually, don't know what happens if you buy or sell pre-market. Does it sell at the price? It depends what market what your trading app is. Most apps these days will sell at the price. You'll be able to see has it been sold. Some apps, the US is pretty good. Robinhood's pretty good, but maybe in the UK, for example, trading 212, sometimes it executes at the time, and sometimes you have to see what market it's on. It might execute when the market opens, so you can just see if it's been executed or not by the time you press sell. Vaz is in the show. Lovely to have Vaz here. Thank you, Sensei. Says Yolanda, no worries. What was the GDP data? GDP data was half of the consensus, so not very good at all. Cheers, Bella. Big C rid in its head, but all clear now. Why is crypto pumping? Crypto's pumping because it's volatile. It's broken out. We saw the big breakout on Bitcoin. If you look at the technical charts we've been doing on Bitcoin in the newsletter, the breakout was due. There is targets on the newsletter. Also, it's a volatile day, so it's choosing a direction to go to. I don't think there's any real big major news stories apart from maybe there's not that many mines. There's not mines in the Strait of Hormuz, which we were expecting or were reported yesterday, and the inflation data wasn't very, very scary. It was just bad. Anyway, thank you everyone for tuning in. See you later. I'll be putting out a newsletter on private credit. Well, I might even put it out tomorrow and go live with it after Vaz's show. So keep an eye out for Vaz. He'll be live with his EvToll weekly show. Next week is FOMC week and the release of the training course. If you want to get it before the price increase, then get the free trial of the 25% off. Until next time, take care of yourselves and each other.